Now, let us discuss Section 32, gross income. But as I've required all of you before, you have to memorize at least the first, paragraph A, this one, the general definition. Gross income means all income derived from whatever source. Okay, so from whatever source, be it legal or illegal. The idea here is whenever you earn income from whatever source or derived from whatever source, you should be taxing. You should be reporting that. Okay. Now, this includes the income here, this one, but this is not really limited as the law says here. So this is not these are not exclusive. Okay, but you may have the idea already of what are the income that you usually earn. Okay, you have this compensation from the conduct of trade or business or in the exercise of a profession, right? The oldest profession, the lawyer. Anyway, gains derived from dealings in property, interests, rents, royalties, dividends, annuities, prizes, and winnings, pensions, and partners' distributed share. If you remember the PAL case, the Supreme Court um, made a distinction between the gross income as defined here and the gross income as defined in Section 27 for purposes of what? Um, Computing the minimum corporate income tax. And, well, as you've noticed, we've jumped into Section 32, but if you go back to Section 31, this is the taxable income, the definition. So, this one, if you remember the illustration that I've given you, the basic um, profit and loss statements, you have these items of gross income, and less the deductions and personal exemptions, additional exemptions, if any, that's what constitutes the taxable income. So you have this gross income, okay? So what is the meaning of gross income is found in Section 32. Then you list all your everything, everything that you've earned for the taxable year. And you less the deductions, the allowable deductions, and personal and additional exemptions. That is on the premise that you also earn or you do not earn pure compensation income. Okay, because if you earn or you just earn, just work, you don't, you have a job, you're employed, you don't earn anything except, well, for passive income, then you are not allowed under Section 34 to claim allowable deductions, but you may be allowed or you are allowed to claim personal and additional exemptions. Okay, so the idea here is that every time you earn income, you must report that to the BIR. So these class are like these royalties. You remember whenever you receive royalties, and what you, when you write a book or you compose a musical piece or you painted a picture and you sold that or whatever royalties that you receive, there is this final withholding tax, right? Remember, 10% for interests on the banks. You receive interest from the deposits you place in the banks. Dividends, this is 10% when you receive dividends from what? Corporations or when you're a partner, business partner. And with this one, prizes and winnings, okay? This one, you has to, or wedding or whatever, income derived from whatever source, okay? And pension, etc. We'll discuss that later, but that is the idea. All income should be reported, whether it is withheld already by the rolling tax agent or you report that in your income tax return. So that's the definition of gross income. If we go back again at the PAL case, the Supreme Court distinguished this definition from the definition of gross income in Section 27. Let's go there. You remember this, the minimum corporate income tax. There is this also a definition of the gross income, whether you sell merchandise, right? This one, paragraph, subparagraph 4 of paragraph E, section 27, is gross income. This is different because this gross income is the basis of computing the minimum corporate income tax. So less gross sales, gross sales, less sales returns, discounts, allowances, and cost of goods sold. If you're rendering service, rendition of service. So you also have your cost, right? So the direct cost in rendering the service. Just remember that this gross income definition here is different from the gross income defined in section 32. Okay, this is for MCIT, and the section 32 is for all other the general definition of gross income to arrive at a taxable income as stated in section 31, right? This one, here you go, taxable income. So next we will discuss about the exclusions. I'll stop here because exclusions are more on, well, there are a lot of things that would be discussed there. So memorize this. You don't have to memorize that verbatim, but you just memorize the sources of gross income. And just remember, any income derived from whatever source. So you go back to your figure 1. The gross income is, we'll say if you are what, a resident or non-resident citizen. So only gross income derived from sources within the Philippines would be taxable. But if you're a resident citizen, whatever income or wherever that you earn that, then that should be taxable. Okay, that's it for section 32A. And we'll go to section 32 Bravo next.